Hey everyone, this is the Millennial Investor here with a February update on my stock portfolio. I decided to do this update because just recently, and I think within the last 6 months or so, Robinhood, which I use mainly for stocks, they recently released a desktop version of their app. So previously you could only use Robinhood on your phones or on your tablets, but now you can use it on your PC and not through some app plugin or something. You can just go to robinhood.com and you can pull it up, and it's a very clean interface. What you're seeing right now is the interface for it. So I just kind of wanted to show you this and go through what my picks have been and just kind of break down my portfolio since it's been a few months since I've updated you all on that. So right now I'm in the positive for today. It is a day off for me, so you can kind of see that the numbers are in flux because things are happening because the market's still open. Overall, since December 24th, 2018, the market's kind of been on a very strong uptrend. I'd say like 10% beyond strong. So things have been looking really good. If I went to like the previous week, up $900 previous month, up $1,600 previous 3 months, about 1,900, and then over the last year, up about 10%. So if we took a look at my portfolio from all time, I'm not up a significant amount. Unfortunately, when I started investing, I didn't make the best judgment calls. I was going for that quick dollar scheme, like many investors do. And then luckily within the first year or so, with this much downtrend, like I realized like the strategy is to invest your money in stocks that you have confidence in, that you believe have a good mission, and let your money sit. And hopefully those stocks have dividends. But if they don't, but they're a good company, just be along for the ride. There's a lot of great stocks like Amazon that don't pay a dividend, or Chipotle if you like Chipotle. But they're strong companies, so I'm actually not invested in either of those, but I just kind of wanted to show you this. So yeah, December, I think 24th was like the lowest point of the market, even though here it says about 21st, but I think it's weekly now. Uh, and then like after that point, everything's kind of been up and up. So even though it's only February 20th right now, the market's been doing pretty nice. Okay, and in terms of my investments, I have a series of things I continuously invest in, which are my real estate stocks. I invest in a number of those. Right now, CRT is not looking the best. I have, I believe, a $14 average price on it. Yeah, $14 cost average price. So I'm down 17%. But that's just because they've been cutting their monthly dividend. But I'm looking into that, and I'm not bailing on it at anytime soon. So yeah, I got my realty stock, then I got Kohl's, more realty stock, Verizon, just 7 shares of that. And that's the other great thing about Robinhood. You can just buy a few shares here and there. So if I have $50 and I can afford a Verizon stock, I'll buy one Verizon stock. There's no fees, and then I get paid those, at least for Verizon, quarterly dividends. A little bit in Ford. I haven't really put a lot in Ford since for a while, I want to say. Yeah, my average price is about 1077, and that's down 17%, just because I'm not very confident on their direction, but I'm not in the I'm not trying to sell at the moment. So I have a decent chunk invested in AT&T. I believe that they have a lot of future platforms they can invest into, and I kind of think they're cheaply priced right now. So I've been investing into AT&T, and they've been doing pretty well. I believe I'm on the, nope, not positive, I'm down 8% with AT&T. You can also find more information. If you just kind of scroll down, it tells you like the average price you paid, what it is right now, and then like analyst ratings. So whether you should sell, hold, or buy. And I don't know exactly how many places actually do these ratings, but right now it's roughly buy or hold, with a very small percentage of analysts saying to sell this. So yeah, AT&T is one of my big ones. My other big one is Disney. They make up the majority, and that's just because depending on where their online platform goes, I could see them overtaking Netflix. And I know that's a big statement, but Disney does own a lot of property, And if they utilize it correctly, they could become a serious competitor. So we'll kind of see where that goes. Medtronic, Intel, I put a little bit more into. I have a decent amount of shares of AMD, Pepsi, Nvidia. ARKW has a bunch of different technology stocks in it, so that's pretty good. Walmart, Starbucks, which I actually jumped in Starbucks when they had like a bad report or like an okay report, and then suddenly like the stock price dipped like significantly. So it was about $50, and I was just thinking to myself, well, Starbucks, every time I walk into Starbucks, it's always packed. And even if they had like one report where they didn't quite hit their numbers, it's not like the demand for coffee is going to go down. And Starbucks is very well recognized, and they're starting their own like home part business where they have their own coffee cups or that coffee maker thing. So yeah, I decided to invest in Starbucks when they were really cheap, and they've gone up 38%. So yeah, just one of those things. If you have confidence or if you believe a company is going somewhere, just putting a little bit of money into some shares, a couple shares doesn't hurt. And then if they do drop, just dollar cost average, buy a few more shares at that low price, and then eventually they'll start to go up. And that's one of the great things about Robinhood. They don't reinvest their dividends, which kind of sucks, but they do allow you to dollar cost average at a very low price. Or at a very like low rate, so you don't need to pay all those fees. So a lot of times, like I bought one share of JP Morgan, and they immediately, oh, I want to say went up, but I guess they've dipped since then. So if they dip a lot, you just buy an extra share, and that averages the cost, and then eventually they'll turn around. It's not like JP Morgan's going anywhere anytime soon. So yeah, Apple, 3M, Southwest Airlines, when they allowed you to buy stocks that were not like directly US based, I went for some Nintendo stock, and then this I believe was some company that got liquidated or something. Yeah, I apologize if you're like, this guy doesn't know what he's talking about. Sometimes, yes, that's true. I don't. And I look at my dividends. I always feel like getting dividends back from a company, even though it reduces the share price, is always a good approach because it allows you to reinvest that or move it elsewhere. So I always try to invest in dividend stocks whenever possible. So I just got a number of dividends. I believe my dividends have gone up year to year around $100 per month. So just showing you the power of dividends, investing, and compounding interest. Just take those dividends, reinvest them, and then your dividends will go up, the next time they pay out. So yeah, just small amounts. But if you went back a year to like the video where I'm showing these small amounts, these were like $1 and this was like $3. So just the power of like compounding interest and reinvesting. It's really cool. And yeah, AT&T now 3 times or 4 times per year are going to be paying out about $60. So that's pretty cool. Okay, yeah, so anyway, I just want to show you this cool interface, show you how my stocks are doing. They're doing great. So if you have any questions, feel free to let me know. Otherwise, this is the Millennial Investor signing out. Peace.